Welcome to Technical Tuesday. This is Fed Zach, senior trading strategist here at CMTrading, and we're continuing our indicator series. Now, under indicators, which is the category, there are oscillators, which is a subcategory, and we're going to be doing RSI. But before we start, make sure to like, subscribe, and do share, especially if you find value in this presentation. Okay, so many a time, okay, what we need to do as technical traders is to use as many tools as possible given the market conditions that we're given in order to make the best decisions either to open a trade or close a trade. Now, RSI is very different than using relative strength as a strategy in trading the financial markets. I've spoken about that at a separate video, but after this video you should be able to plot RSI on your chart and be able to analyze RSI, seeing the particular asset that you're trading and make a decisive decision afterwards. Okay, now we're going to actually do this in real time with an asset that is trading right now with a relative strength index indicator to it. Okay, so let's just break it down. What is a relative strength index? What is its function? So the function of relative strength index is really to measure the speed and price change movement. That's all it is. Okay, so many a times with oscillators, that's what we're doing. We're either trying to understand the wavelength that it's trading in and the speed that it's trading with. Okay, now there are two types of markets that we've spoken about in the past. There's trending markets and then there's range bound markets. Okay, this is more for a ranging market environment. Okay, and as everything else with oscillators, there's going to be a 0 to a 1% histogram at the bottom of the screen. Now, anything really above 70 is either thought to be overbought, okay, or is in a condition that's overbought in an environment. Well, it could stick around that area for quite some time and be overbought for quite some time. But the real effect of using this oscillator is to anticipate failure swings. When we think we're going to go higher and continue going higher, and then it fails and it makes a retracement. Okay, so keep that in mind. So we could be above 70 for quite some time before we actually sell off. Or it's either oversold when it's below 30. So it's one of those two elements that are going to be. Now, this is really an important element to keep in mind when you're trading in a trending upwards environment. So when you're in a upwards trend, your bull market is relatively between above 40 to 90 as a general rule and is used as 50 as support, from 40 to 50 as support. Now on the opposite side, when you're in a bearish market, when you're in a downtrend, you're going to be looking for it to be anywhere between 30 to about 60 for most of the time, okay, 10 to 60 most of the time, and going to be using 50 to 60 as its resistance-ish level. So anytime it pops above 50 or 60 on a downwards trend, that means it's changing to an upwards trend, or vice versa. If it's going from an upwards trend and it's going between, let's say, 50 to 90, right? Once it breaks 50, it's going to be breaking its downwards trend. Okay, so let's see this in real time, all right? So right in front of me, we have JP Morgan. Those of you who have been watching JP Morgan, it's been a very strong stock in the market relatively recently, okay? It's been trading always in an upwards trend for the past, I would say, year and a half, really because of what's been happening in the inflation arena and interest rates, okay? As that has given it more spectrum to take advantage of profit margins because everything is in percentages for banks, okay? So we're in an upwards trend, okay? We even hit $200 a share. Now on the bottom part, you'll see my histogram already set up, okay? Now you'll see that for most of the time, we've been above the 70 level several times. Now more recently, we're making a lower high when we're doing that histogram, when we traded above that 70 level, and you could see that we're actually trading below it right now and making a lower high. That's a failure swing. Now, I'm not going to say that this is going to make a massive retracement, it's going to be a sell-off, but I'm just highlighting the fact that it's happening in real time right now as we're trading the financial markets. So keep this on the radar because this may still have a reversal going into the next 2 to 3 weeks as we are processing the earnings and corporate earnings environment that we're currently in. Also, the FOMC is making rate decisions in the next few months also, so it's going to affect the price of the stock as well. So keep this in mind. RSI, very useful tool. We'll see you here next week on Technical Tuesday. Thank you, everybody.